if if y'all are like me and y'all started to hear about Silicon Valley Bank and the crisis it was going through, which is not even clearly defined as how much of a big of a crisis it is at this moment, um, started to leak over the last couple of days. I was like, okay, we have to get the one and the only Hotep Jesus in to tell us what the hell is happening. Is this the first domino to fall, or is this an isolated incident? So let's bring him in. What's up, bruh?
Hey, what's going on, Sonnie? Glad to be here. Um,
Th-
so, um, you know, as many people know, I wrote a report. It's called the Patriot Report: Unmasking the Conspiracy of Money and War. And in this, I do a tracing of central banking in the United States of America, all the way back even to Europe, with the creation of the Mississippi Company, which many people don't know is the venture that was bankrolling the Louisiana Purchase under a gentleman by the name of John Law. John Law is basically the godfather of fractional reserve banking. When we look at the SVB situation, this is a calamity stemming from the practice of fractional reserve banking. Basically, the bank doesn't have the money that people think it does. So there are deposits, and then with those deposits, basically the bank starts gambling. I'm not sure exactly how much of the assets they had on hand or deposit they had on hand. Maybe it's 10% or less. But basically what happened was they made an opportunity cost decision. They said that these mortgage-backed securities that we currently have are losing us money under the Joe Biden administration due to inflation and other factors that are affecting the real estate markets. And they said, we'll actually make more money here over in the treasury bonds, which I think was like 2.25 or something like that, or 2.75. So basically they said, we'll take this short-term loss to get a long-term gain by moving our assets. But in the meantime, many of their executives were dumping their bonds. Peter Thiel and other investors started basically what's called a bank run. And the bank, basically lost the confidence of its investors and ran into insolvency. We don't know exactly what the ramifications of this are. I can talk about what happened yesterday, and we can speculate on what's going to happen next week. So what happened yesterday, we saw that there's basically, in the cryptocurrency world, there's this thing called United States Digital Coin, which is a USDC, which many speculate is the CBDC, central bank digital currency, or could potentially become that. But anyway, it stopped being pegged from the dollar briefly. It dropped, and some like Gemini Exchange, it dropped to 84 cents compared to the dollar, and then other agencies it was like 90 cents or something like that. So many people started moving their assets from USDC to Bitcoin and other assets because it's more of a speculative asset as opposed to a currency, which USDC tries to purport itself to be, or an exchange of assets, a medium of exchange of assets. So you had that calamity happening. So the speculation of next week, what's to come, right? I don't know. Many
Hold
people
up,
are saying
before
it's
we
the
get to
biggest.
that, because before we get to
Yeah.
that, contrast and compare what we're seeing happening with SVB and what we saw happen with FTX.
Oh, FTX, yeah. So SVB and SBF, Sam Bankman-Fried, or as some people call him, Sam Bankman-Fraud. Essentially, it's the same thing. I think that SBF was just way more negligent with the way they managed assets. SVB basically just lost the confidence of its investors. You put money in a bank, you expect them to make the right decisions, and then you see them start selling an asset and then asking for money. You're like, wait, do you know what you're doing? Banking is basically a confidence game. You have confidence in this bank that at some point they're going to be able to return to you your money because you give them your deposits and you're hoping that they can safely guard those things for you. That's the point of having a bank. And basically, they lost confidence in their investors and then started a bank run amongst Peter Thiel and others. But SBF was just basically like a bunch of kids playing around with people's money, way over leveraged in their investments, pretty much, no solvency almost If you look at the bankruptcy filing, many of the Bitcoin assets they had on hand were just numbers in the computer, and they didn't actually purchase Bitcoin with people's deposits. I think SBF is way more devious and negligent compared to SVB, but SVB is just basically, investors, C-level executives. I mean, one of the executives is one of these pronoun people, right? So you got these pronoun people where you get a diversity hire and you bring these people in. And it's like, do they actually know what they're doing? Or are you just hiring this person because you're trying to meet some quota of diversity? Do you
And
have that
see, that's
aspect
kind
that
of what that's kind of what I was that's kind of what I cuz that's kind of what I was shooting for, right? Because
mm-hmm,
to me it seems like what you're getting is what happens when woke goes into banking.
mm-hmm,
So when you're looking at a lot of the money that was in the Silicon Valley Bank, that's a lot of startup money. That like a lot of the people that are supposedly or rumored to have been hurt by this are like definitely the people that you find in that extra woke crowd. You know what I'm saying?
yeah.
And so that to me was is that the common thread between the two stories. Like this is what happens when wokeness meets banking.
Absolutely. I mean, the name of the bank is Silicon Valley Bank for a reason. It was bankrolling Silicon Valley startups. Shopify was one of the companies that either did or does bank with this company. I think the big startups will be able to take this hit. I know the FDIC was only insuring up to 250,000 of those deposits, and the rest of the money is basically, lost into the wind. But the smaller startups are the ones that are going to really hurt. The bigger startups, they can take a little loss because, I think they diversify where they put their money. I know Andreessen was involved in this situation. A bunch of people. Peter Thiel pulled out. Some people are blaming Peter Thiel for this because he's one of those people who, from PayPal
Didn't
Mafia
lose a
that pulled out of
dollar.
this bank and
He
started the
he's
bank
one of
run.
the people that did lose a dollar because by the time all this stuff started happening, he had pulled every single dollar of his out of that bank.
Yeah. And some people are blaming him for starting the bank run. I don't know, maybe, but when you have the people that work at the bank pulling out their own personal bonds in the bank, that's a huge red flag. Forget Peter Thiel. If the people that work for the bank are pulling their money out, you should probably pull your money out too. And I think that's what signaled Peter Thiel and the rest of the big investors to pull out. But I mean, it comes back to the fact that banking's a scam. It's sort of like a Ponzi scheme. They aren't solvent. They don't have the money that they say they do. And it's just a common practice. This is a common practice. No matter who you bank with, I don't care who you bank with, the money they say they have in deposits, they don't actually have because they lend it out and they leverage it. And this is the big scam of fractional reserve banking. This is the big thing that people have been complaining about for many years. And this is not new. This is something that happened in colonial America, in the Massachusetts region, the North New England region, where you had, in PA, they were practicing sound banking, where there was a one-to-one. And then in Massachusetts, they were like, we're going to practice fractional reserve banking, and they ran into trouble. And this is the true reason that led to the Revolutionary War. People think the Revolutionary War was about independence and whatever. No, these guys wanted to be next to the crown of England. They loved England, okay? The reason why is because England said, you guys don't practice responsible banking, so you're going to have to bank with us. You're going to have to trade in our currency. And the colonies said, no, we want our own currency, and you can't tell us how to run my banking and my money. And that's really the start of the war. This is stuff you don't learn about in your government-funded education system, but this is the truth. These are the details that are in my book, The Patriot Report.
And as recently as a couple of days ago, all of the credit rating sites had given like Forbes and not Forbes, but all the credit rating sites had given
Yeah, Moody,
Silicon Valley
yeah.
Bank excellent ratings. Forbes said that one of the top 5 banks. Like they were like creme de la creme, and
Yes.
a lot of that had to do with of them and their flaunting of their ESG score as opposed to their sound banking practices. And we've kind of reached a point now where we have a political party in power that would rather look at that EGS score than to actually have sound banking in our country.
Oh yeah, absolutely. Well, Jim Cramer, the TV guy who talks about finance, the week before said SVB he gave it a buy signal the week before. Then the next week, Moody had downgraded the bank, downgraded their rating for the bank. It just goes back to the fact that you gotta do your homework on these things. You gotta understand what it is exactly that you're investing in and what your risks are.
Yeah,
But
but
it
see, like
always
that's the
comes
same.
back
People would say that they did their homeworks because they listened to Forbes or they listen. You know what I'm saying? Like when you have
right.
every respectable quote unquote, okay, quote unquote, every respectable financial, thinking
Yeah.
group or thinking spot all telling you the same thing. Isn't that like considering doing your due diligence? And even
No.
if you
No, it's not. No, it's not. First of all, when I say do your research, like not to pump my book, but you got to read my book because you have to understand. Another great book is Wealth of Nations by Adam Smith. But my book, The Patriot Report, you have to understand the mechanism, the instruments that are being used before you can even begin to understand what Forbes is saying. Because if you understand the mechanism and how they're being used, you can spot the lie on Forbes. I mean, Forbes, does anybody know the origins of the Forbes family? The Forbes family got their money from selling dope. This is a dope dealing family, the Opium Wars of 1812. Yale, these Ivy League universities were founded off of selling opium in China. This is a gangster family. So to come around and say, hey, I'm going to do my due diligence by reading Forbes, it's like, so you trust in dope dealers now? This is what you're doing? So that's not, just because you read Forbes, like they always say, I heard Denzel Washington say, if you watch the news, you're misinformed. If you don't watch the news, you're uninformed. So you're really reading Forbes and these things to be informed, but you have to understand that there's misinformation in these publications. So when I say do your research, what I'm saying is do your historical research, do your Series 7 research, understand the mechanism and the instruments at play here. And then when you read Forbes and for example, you brought up wokeness. If you go and you look and the name of the bank is Silicon Valley Bank, why would you invest in that? You're investing in wokeness. If you're a conservative, you wouldn't invest in wokeness. You would know that these people are idiots, and you wouldn't put your money there. You would put your money into more sound investments, things that are protocols, things that are long-term savings. For example, one of the best investments in the world is guns. Don't put your money in Silicon Valley. Go buy some guns and some ammo because you're going to need that to protect your assets. Go buy gold. Go buy silver. I would even venture and say go buy Bitcoin. And this is a big problem with conservatives. They don't understand Bitcoin. But what happened when SVB collapsed this week? The price of Bitcoin went up because people had to find a safe haven for their USDC, and the best place to put it was in Bitcoin. So you have to have a diverse portfolio. When you invest in Bitcoin, you're investing in a protocol. You're investing in not people, but you're investing in a technology. Because Bitcoin doesn't have a board of members or directors, right? That's worried about diversity. No, it just operates like TCP/IP is a protocol that operates the internet. So you invest in protocols, invest in technology, but don't invest in. And Silicon Valley Bank was invested in startups. Investing in startups is risky to begin with. Majority of those things, 90% of those things are going to fail. 95% of startups are going to fail. So the fact that the bank was primarily, well, I can't say primarily because I don't know what their asset allocation looked like, but their calling card, their messaging was, we're the bank for startups. And I'm from the startup world. I've done a ton of investing in startups. Whether it's sweat equity, I just cashed out of a startup. So this is the world I come from. And the one thing I know is it's risky business. So if you see the bank is primarily in the business of that, you got to know, But I think a lot of the money there was mostly, it wasn't retail. SVB wasn't a lot of retail money. It was mostly commercial money and whale investors. But again,
And I
comes
was
back
like,
to wokeness.
I know like two of the names that came out already, and I suspect that next week we're going to hear a lot more names. But two of the names that did come out was that Megan and like
Harry.
Prince, yeah, Megan and Harry had their money invested in SVB, and I think you're gonna have a lot more people with high profile names coming out and saying that their money was invested in it. But also what you have right now is like a lot of and this is funny to me. You have a lot of Democrats that are coming out, and this goes into us looking forward into what's going to happen next week. Coming forward, and it's so funny that Eric Swalwell is the one that's kind of leading this charge right now, saying that it's not fair to the depositors to only have up to 250K of their money insured, and that
Yeah.
we need to look at a way to make sure that they are made whole. And by we, I'm guessing he means the federal government. So
Yeah.
I'm expecting next week for them to talk about why we need to bail out SVB.
Yeah. Yeah. The only people I care about somewhat are the employees that may be laid off. The rest of these guys, I can care less if they lose their money. But yeah, next week I'm gonna be on YouTube. Follow me on YouTube, Hotep Jesus. I'm gonna have a microscope on this thing next week, and I'm gonna be reporting on it probably all week long. I live for the financial news, especially this banking stuff. So it's going to be very interesting to see what happens Monday. You're going to see ramifications in the crypto markets. You're going to see it in the stock market. You might see it in the bond market. But it's going to be interesting to see how the government handles this. Who gets bailed out, how much gets bailed out. I don't like speculating on all of this because it's above my pay grade, because a lot of this stuff is handshakes and favors and who you know, and it's not really about, what's the right thing to do. Personally, I think when it comes to banking, the right thing to do is let the bank fail. If you do bad business, you should fail. If you start up a company, nobody comes and bails you out when your pizza shop don't work. Nobody bailed out 50% of small businesses that went out of business during the pandemic, right? Where was the aid for them? 50% of small business, more than 50% of small business died during the pandemic. Where was that bailout money? Where was that bailout money? Nobody cared about small business. But when these banks, like the 2008 housing crisis, when the bubble popped, they bailed out a bunch of banks then. So what happens Monday?
And nobody went to jail. Not a single perp walk, not a single indictment, like nothing. Nobody went to jail. And
actually, I think one dude went. I think it's only one person went to jail during the 2008 housing crisis. I think one guy.
I can't remember that one guy. So
yeah,
he won't big enough to remember. You know what I'm saying?
Right.
So you know what I'm saying?
Right.
And now we're even seeing that the former CEO of Lehman is actually sitting on the board of directors at SVB.
Yes.
So
yes.
so the CEO that helped to cause the last crash is present when the first domino is falling down. I mean, it's just
it's a revolving door.
If you're like an American citizen and you're just watching what is happening to our country right now, right? And we're seeing every single institution just crack. And I
Hmm.
don't think this is going to be the only bank. I think that as soon
Right.
as government seems interested in bailing these people out, you're going to see a whole bunch of other banks come forward and say, hey, look, we got a problem. Like we haven't went bad yet, but we could. So how about
Mm.
you preemptively help us from? And I think you're gonna start to see that, and you're gonna start to see that talk we heard back in 2008 again, where it's they're too big
Hmm.
to fail. We gotta bail them out.
Well, I can tell you what's going to happen from a speculative perspective based upon historical record. Whenever we look at panics that happen in the United States, what you get is higher centralization at the central banking level. What we're going to see is, for example, after the Great Depression, we get the Federal Reserve. Panic of 1812 or 1819, I can't remember. We get, I think, the second bank of the United States of America. You always get this centralization of credit following a panic, and many speculate that the panic is artificially induced. It's purposely created to centralize credit within the hands of a few. So what's coming now is the Biden coin, as I like to call it, or the CBDC, central bank digital currency. And this thing, if you go to menoforder.com, we wrote quite frankly, honestly, and openly about this thing in a way that people can understand. But what I believe is going to happen is they're going to fail the banking system. They're going to cause like your banking system is about to completely change. Like, you know how you go into the bank? It's already happening where you're not like the other day I had to make an appointment to start a bank for one of my new LLCs, right? I couldn't just walk in. But you're going to start to see your regular bank is no longer going to exist. We're going to deal directly with the 12 federal banking, what do you call it? The 12 banking
Reserve,
systems of the Federal Reserve System.
the
We're
Federal
going to
Reserve.
deal directly with those, okay? The federal bank. And you probably have maybe three banks that might stay around, like J.P. Morgan Chase and, something else. You probably have three major ones, but your everyday bank is going to die, and it's all going to go under the CBDC. And this way, there won't be any inflation. I have complete control over the supply because you can just burn the supply out of circulation because we're talking about cryptocurrency technology or lack thereof of cryptocurrency technology. I've done presentations on this thing called Regulated Liability Network. They just published a story last week about Bitcoin. Bitcoin is basically a new CBDC coming out of, obviously, Great Britain. And basically this thing, they're saying that the initial depositors will not be able to save their money up to a certain amount. You will have to spend it and use it and circulate it within the economy. So, again, this is what's going to happen is they're going to create greater control over the money by making banks default. And I think that's the big play here. So you're correct where you say this isn't going to be the only bank. Majority of banks in America are going to dissolve. They're going to go away, and they're going to get gobbled up by, big three. Just like the media is big six, you're going to have the big three. Just like social media is the big three, banking is going to be big three. It's already like that now, but your little bank is going to die soon.
Oh my goodness. Okay. Check out Hotep Jesus channel on YouTube and Rumble. All this week he's gonna be covering it. He's excellent on this topic. He got great people like Wendy there, rocking with him as well. So make sure you check it out all this week. Thank you so much for coming through and chopping it up. We'll be back in just 1 second.